Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. M&M just reported numbers, and clearly you can see the kind of growth trajectory the company is aiming for. Joining us on the show is Dr. Anish Shah, Group MD and CEO. Welcome to the show, Dr. Shah. My first question coming to you is, I don't think so there is a need to look back at what the company has reported. The key is this trajectory expected to continue? And if so, what's the outlook looking like in terms of FY26?
So, the reason to look back is just to see what has enabled this trajectory. And it's been all our businesses contributing to it. In auto, we had talked about a mid to high teens growth for SUVs at the start of the last fiscal year. We have closed with a 20% growth. Farm, we have executed very well in a tough environment, increased share. Across Mahindra Finance and Tech Mahindra, both are on a strong path to be able to get to the kind of milestones that we want to. And our growth gems have built a very strong foundation. Now, with that backdrop, if we look at this year, we have again said that we will grow SUVs at mid to high teens. And it is a reasonably tough environment, but I'm pretty optimistic about where we will be. And hopefully we again come back with the same results as we did from an SUV standpoint at least. And other businesses are on a good track as well.
So would it be right to say that under promise, achieve higher than that? Is that the strategy?
Well, if you were to look at our promise last year, mid to high teens growth in SUVs was not under promise by any margin. Right? In fact, a lot of people told us at that point in time, are you sure you're going to be able to get there? So it was a very high promise, a very high set of expectations, and we've been able to get past that as well. So our goal has always been to set bold targets and be able to get our teams galvanized to achieve them.
Right. Dr. Shah, the key with M&M was always tractors was a business that people looked forward to, right? SUVs, there was pressure taking into consideration the capacity constraints at some point in time, which is left far behind now. If you have to talk about the tractor business alone with all the tailwinds in place, what is the kind of growth that you're anticipating, not only in the domestic market, taking into consideration global markets also, where US is becoming a turnaround and taking tariffs into consideration?
So the domestic market is expected to grow at high single digits for the year, which is a good growth rate to have after the last 2 years that we've seen. Internationally, there continue to be a lot of pressures. The US market has declined for 13 quarters in a row. And we see some pressures still continuing. If interest rates come down, we will start seeing that easing up to some extent. But on balance, that's still a very small part of our overall tractor portfolio, and therein lies the opportunity for us to grow. We have been gaining share in some of the key markets globally, and we will continue to do that.
Okay. And talking about the SML Isuzu portfolio as well, we've already spoken to you about all the tailwinds. One bit I want to touch base with is the trucks and buses segment. If you have to talk about the domestic market, yes, you already become number 4 position after the acquisition, but penetration in this segment is becoming absolutely difficult. I mean, you've seen global players as well, where in spite of getting into this segment, there are players who file for bankruptcy as well, right? How difficult is it going to be to actually garner that kind of market share and sustain only in the trucks and buses portfolio?
So first, that's happened in the SUV segment as well, not just trucks and buses. So our approach has been that we pick certain areas and look for very strong execution in those areas. Our business in this space has spent the last 3 or 4 years reinventing itself, coming up with a much better set of products, a much better customer service, a wider footprint, and so on. So that gives us a lot of confidence. In the LCV segment, we have a 51.9% market share, and that's up from the low 40s just a few years ago. And SML is going to really help us focus on the intermediate segment right now in commercial vehicles. And we feel we can do well in that segment, and then we should look at heavy trucks and buses after that. So that is going to be tougher to penetrate with some strong players there. But that's one where, at this point in time at least, we will focus on intermediate, and we will look at that at some point.
So would it be right to say that this is going to be a space where Mahindra is entering, which is absolutely growing, but complicated and competitive. So the gestation period to get where you want to get is probably 5 years down the line?
In the intermediate segment, we're actually much better positioned.
No,
because
correct.
with buses, for example, in this space, we will have a combined share of 20% or so. And yes, it is a competitive space, but that's what we are used to in all the spaces.
But the
we're
capex
playing.
also becomes very high in this segment, right? And that's what you've seen in terms of trends with other players. And building the electric bus at scale is a capital-intensive business. So how do you counter that?
So we don't expect any more capex than we have outlined in the plans for both businesses. And we should be able to have a strong position with that, as we have in other segments today.
Right. When you talk about the EV portfolio as well, overall, any plans to launch in the lower category, entry-level category? Because let's be honest, M&M, top of the class models, but on the expensive side, right? There is a requirement of EVs in the entry-level portfolio as well. Any strategy on that front?
So at this point, our focus is what we call authentic SUVs and delivering very strong products in terms of quality at very reasonable prices to customers. Beyond that, our questions for a future point in time, our approach does tend to be focus on a few key areas, play very well in those areas. At this point, this is where we are.
Last question. In terms of businesses across the group, where will your energies be focused towards to get to that turnaround point, like the way we saw a turnaround coming in on the automotive segment in M&M? So which are the businesses which will need that focus way higher than the others?
So we are seeing that across multiple businesses. So Tech M, Mahindra Finance are on a very strong track. We talked today about 6 of our scalable growth gems, and you've seen some fairly dramatic results from many of them. Last mile mobility business has gone from 14,000 vehicles it did in a year to 78,000. That's more than 5x. Our real estate business has gone from 670 crores of pre-sales to 2,800 crores of pre-sales. So as we look at all of those, we've got a set of businesses that are really well positioned. 6 of these businesses are targeting $2 to $3 billion valuation each in the next 5 years. And then we have our emerging growth gems as well, which are targeting $1 billion of valuation. So we're actually moving well along the path of creating the Mahindra Group as one which has multiple large companies that plays today in 70% of India's growth.